Good evening, everybody, and welcome to Metropol TV, the first 24-hour business news channel here in East Africa. Welcome to the Smart Investor. Today we got a two-part show. We're going to talk through some of the market-related content, and in the second half, I've got the very dynamic development economist Anzet Severe, who's going to speak to us about the Big Four. Do we have the balance sheet? Can we afford it? And a whole bunch of other things. But let me start off here in Nairobi. The stock market, which normally opens at 9 in the morning, didn't open till 4:20, by which time it's normally closed, and was open for just 40 minutes. There was a problem with the NSC speaking to the CDS system. The CDS system is where all your shares are held in your name. And basically there was a malfunction between those two, and that's why we just had 40 minutes of trading past the normal trading hours. I wanted to share with you an article I read in the Africa Report. Africa Report is one of the big business magazines that looks at Africa. Nicholas Norbrook went and visited Bob Collymore for his interview about Safaricom. And it was a really interesting interview, and I just wanted to share some thoughts that I picked up from that interview. Collymore is a silver linings guy rather than a dweller. One of those silver linings is his ability to put more time into his music. He's a big jazz fan. We all know that. Listen to what he says about competition. He's asked about Telkom and Airtel and where does he believe the real competition will come. He says this: "For all the kudos Safaricom won worldwide for its mobile payments platform M-Pesa, you can pay for things with your Fitbit now," he says. I haven't tried it, but I'm sure he's right. And then when he's asked, about Telkom, he's asked about Airtel, he's quite dismissive. And he says the competition for Safaricom will come from big tech. By that he means Amazon, Google, Facebook, Tencent, WhatsApp, who's about to launch a payments trial in India. And he's asked, if WhatsApp gets into payments and comes to Kenya, what will Safaricom do? He says, we don't get complacent about these things, but for sure we believe we need to evolve, and quickly. The thing that we have today was designed 11 years ago, he says. He talks about a platform strategy. He wants to be a platform, whether it's the banking industry, healthcare, agri, education. He says, look at Amazon, it doesn't just sell books. Google is putting balloons up in the air. It's not just a search engine. Have a read. Excellent report. Safaricom up around 26% this year since the beginning of the year. That's pretty amazing. On an annualized basis, do the maths, that's over 100%. And if you could get those kinds of returns in your portfolio every day, we'd all be retired, but we're not. Then the other extremely interesting point to make, during his tenure, and you might have forgotten this, but there was a day when this share price came all the way down to below 2 shillings and 50 cents. There was panic in these streets. I remember that time many years ago, just around the time when Bob had come in at the helm. That share price has gone up 10 times, more than 10 times. And I can guarantee you one thing, unless you picked up Alibaba in the early days, or Tencent, Netflix, which I'm very bullish about because I think there's an infinite market at $10, $12 a month, unless you pick them up very early, really you could not have beaten the returns that Bob Collymore has served up to his shareholders. It's a remarkable situation. And during that time, actually, the Nairobi Securities Exchange has gone down, if you really look at it in a comparison. Safaricom share price $27.55, market capitalization just shy of $11 billion, nearly half of the stock market in terms of market cap. Half-year earnings, total revenue was 1.22 billion. And everyone's getting very bullish about it again. And the reason is M-Pesa. Today you can pay with M-Pesa on Alibaba's platform in China. You can send money to North America. It's gone global, and I think that's what's exciting people, is that move from local to global, and there's a big deal there, and people are getting very excited, particularly about M-Pesa. And I think one's got to keep a very close eye on that. At the same time as this interview, Dr. Bitangin Demo, who was once the PS for ICT, he was the fellow who took the big bets on the underwater sea cables, and he must be given credit for that, because we're all got fast internet because of what Bitangi did more than 10 years ago. He was at the LSE, the London School of Economics, and he said this: on the tension between who owns the customer, between the banks and the telecoms, the direction we are heading is not who owns what, but rather who understands the customer. And that's a very interesting point. This is all about data. It's about your ability to be a data scientist, to understand what your customers are doing, and fine-tune what you're doing with your customers with that data. He said banks do not have as much data to understand the customer like the telecom companies. So the telecoms have the advantage, and I think that's a story we've seen from Safaricom, particularly from M-Pesa. Now this new overdraft facility, which is going great guns for Lisa. And essentially, there is this geographical opportunity, which Bob spoke about at the last earnings results. I thought they'd be in another country by now, but I think it's going to be imminent that they will be. Moving on, but staying within Africa, Egypt has topped the FDI charts. FDI is foreign direct investment. It's a measure of how confident people outside the country are about your prospects. Always a good signal. If there's no FDI, it normally means everybody's turned their face and they're looking somewhere else. I disagree with President al-Sisi on many things, particularly around the degree of suppression that's gone on in Egypt since that revolution. But I'll tell you one thing. On the economy, he's done everything right. Compare him with Nigeria and Baba Go Slow. President Sisi devalued the currency, let it overshoot to the downside. Last year, it was one of the best performing currencies anywhere in the world. This FDI number is telling you that people are backing him on the economy. It's a big beast. More than 100 million people. It's an entry point, a gateway to that part of Africa. And as far as the economy is concerned, there's a lot of interest in Egypt, and I think you're going to see that economy grow very strongly over the next 24 months. It might be a place to have a look at if you're interested in taking some of that risk. I couldn't help but notice the problems that we've seen in South Africa. It's terrible, and I don't know why we want to kill each other. I really don't. It beggars belief. And I must say, the only person that actually had something sensible to say was, of all people, Julius Malema. And if you get a chance, go and listen to what he said. He said, we're all Africans. We must all love one another. And I think that lesson is something that we can all take on board, but it speaks to the problem in South Africa. A lot of people from outside South Africa go towards it. It's a bit of a magnet. Jobs are better paid. Just think of countries which have had huge problems on their borders. Zimbabwe, that's been defunct for quite a while. They're trying to recover. Malawi. So we've got lots of non-South African Africans in there, and they always get picked on. They're the first ones to get picked on. It's very sad. And some of those images we saw over the weekend were really quite terrible. Let me go to another favorite of Kenyans, that's Dubai. I remember wandering around Dubai, and there's so many of us Kenyans there. It's quite a pleasure, actually, I must admit, because you can talk to anybody. Everybody's so helpful as well. But, increasing worries about the Dubai economy. It's growing at its slowest rate since 2009. Property prices are down 25% since 2014. GDP was 1.9% last year. To give you an example, and just compare it with some of the prices in Nairobi, because when I looked at these prices, I was going, wow, it's become cheaper than Nairobi. The Burj Khalifa, this biggest building in Dubai, for example, at the peak, a 2-bedroom apartment was $1 million, 100 million shillings. Today, you can buy a 2-bed apartment in the Burj Khalifa for about 40 million shillings. What can you buy in Nairobi for 40 million? The Burj is, of course, an iconic building. But so the prices have adjusted, but the demand is not there. And we see that in the schools. Lots of pupils have left, the numbers have gone down, and the Dubai economy has not been what it was, in the boom times, but it's always been a boom-bust type place. But this time we're in a slow bust. In this article in the Financial Times, one business executive says the entire business model needs a radical reset, he says. Costs are too high to sustain these levels of activities. Some business people question how much the government is listening. This is not a problem in Dubai only, many other parts of the world. It's like we're talking a different language, says one person who attended. You will remember that there was a financial storm. Dubai was close to declaring bankruptcy in 2008. And of course, the big brother, that's Abu Dhabi, one of the other Emirates, the richest one where most of the oil is. Dubai didn't have the oil, and that's why they did so tremendously well to create this wonderful interconnection point in the 21st century that they created in Dubai. They got $20 billion that time to bail them out. Debt to GDP, this is for some of the folks around, is 130% or thereabouts, well over the normal permissible limits, but it's because people have a lot of faith in the model. But the war in Yemen, the sanctions against Iran, there was a lot of Iranian business going through Dubai, that's not going through anymore. And just generally the slowdown. A lot of companies made their Africa headquarters in Dubai, but what we're seeing now is a bunch of them moving out of Dubai. So PepsiCo, the latest one, this is the bottler, referring to an excise duty on fizzy drinks, says, you can save on schooling and housing, we want to localize jobs. So this is a risk for Dubai because a lot of people sat there and operated in all parts of Africa. But if it becomes too expensive and it makes more sense to localize their business, then I'm sure you're going to see further movement out of Dubai. Brexit, you remember on Friday we saw this uncertainty. The Parliament rejected Theresa May's proposed Brexit deal for the third time. I think she changes an apostrophe. It's a 400-page document and she expects a different result. She's not going to get it. She hasn't got it yet. And really, it is adding uncertainty into the mix. She says she's bringing it again this week. Let's see if that happens. This is the front page of the New Yorker. That is Big Ben. And flying out of Big Ben, you got Theresa May. I went to school not very far from there, actually, and used to hear Big Ben ring every quarter of an hour. So very familiar to me. But the issue with the UK is this: how will this play out? I think we can't say with certainty. The majority of the people, 75% of people, think they're going to get a long extension. They're going to kick the can down the road. It's going to be 2 years before they leave Europe. They're going to do something along those lines. But there is still a risk that they don't get their act together, that Parliament doesn't get its act together, and basically that they get kicked out in a very disorderly manner on the 12th of April, which was the deadline. But I don't think that's going to happen. But the interesting point is how, there was a lot of difference in that 27 European Union nation, but they seem to have consolidated with this whole situation with the British. Let's go back to Erdogan, Recep Tayyip Erdogan, the president of Turkey. He has lost his grip on the two biggest cities in Turkey. There were municipal elections. Istanbul, a city of 20 million, one of the most beautiful cities in the world, and Ankara, which is the capital. He lost, I think, both cities. And that's the problem here. It's the high inflation. It's the uncertainty in the economy. It's now feeding into the citizens. They're not happy. And we find this trend in many places. Unhappiness tends to express itself in cities. think of Africa as well. You know, where is the opposition to President Museveni? It's in the cities. Where is the opposition to Omar al-Bashir? It's in the cities. So the cities tend to be more radical. He lost Ankara. He lost Istanbul. And, you know, last week we had this incredible surge in the overnight rate. Do you remember? 1,336% to borrow Turkish lira. Basically, it was not borrowable for that particular day. But the point is, he can't keep it up there. You know, it reminds me of many years ago when I was on the trading floor in London. And Norman Lamont, he was the finance minister in the United Kingdom, and he was trying to defend the pound, and he came on, and interest rates in the pound were about 9%. And in order to defend it at lunchtime, he said, interest rates now 11.5%. 2 hours later, he put it up, I think, to 15%. By the evening, the currency had collapsed, and the interest rate had collapsed as well. And my issue with Erdogan is intelligent man, fatal, hubristic error that so many leaders make. They think they are king of all they survey. The one thing they'll never be king of is the markets. And they keep trying it. We see it next door in terms of the cashew nuts. We see it in Erdogan trying to fight the currency markets. You can't fight. You have to learn that lesson. And if you don't learn it, you'll learn it whilst you're in power, and it always ends badly. The Turkish lira, in my opinion, is a big sell. I think it's going to fall sharply. And I'm worried that what will happen in Istanbul will infect other emerging markets and even the frontier markets as well. So we've got to keep an eye on how things develop in Turkey, because the risk of contagion is if someone in your family's got a disease, the risk that you get that disease. And what I'm talking about is if Istanbul gets a disease, there's a risk that other emerging market countries as far away as Brazil, South Africa can all catch that same kind of disease and panic, and you get a feedback loop and everyone starts to panic. And what do they do when they panic? They tend to buy the yen. Just remember that. The dollar, and this is a dollar index, it's a composite of the dollar's performance. The dollar has been extremely firm this year. A lot of people were trying to sell it. They said it can't last, it's not going to be strong, etc., etc. At one point in January, I thought I was the only one who believed it was going to be a strong dollar, which is normally a good place to be in the markets, because if everyone thinks the same, the market tends to go in a different direction. But the dollar, I think, is going to rally quite sharply, and you should keep an eye on how things develop from there. 2018, I called it an annus horribilis, because out of 100 asset classes or asset prices, 93% went down. So you have to pick just the 7% if you're going to make some money. Of that 7%, interestingly, the shilling and the Egyptian pound both gave you a double-digit return in dollars. That people don't focus on that, but that was pretty incredible outcome. So I called it annus horribilis after the Queen, who called the year. There was a particular year, I think Lady Diana died, and she said it's been my annus horribilis. And indeed, last year, whether it was the Nairobi Stock Exchange, whether it was the price of oil, whatever it was, it tended to go down. The first quarter of this year has been a quarter mirabilis, i.e. a miraculous quarter. Everything has gone up. The oil has gone up 31%. We've seen Kenya Euro bonds go up around 10% in the long end. Practically the entire asset marketplace has rallied. And the reason it's done that is because the central banks panicked, they blinked, and they've started dosing the patient with a lot more drugs. Can they carry on giving this amount of drugs? I'm not so sure, but for now, the sheer amount of dosage that they've given this patient means that it's found some life. The question is it going to make a recovery? Is it sustainable? And that we are certainly going to find out. Just to give you a feel, we had a 13% rebound, just about the same as Nairobi in the S&P. That's the US index of 500 companies, the biggest 500 companies, so that's a good sign. 7% in US junk bonds. That speaks to the rally we've seen in emerging frontier and riskier bonds. So for example, the riskier side of life, people have liked the cheap money and they've chased yield. And an eye-watering 32% surge for oil. Fortunately, because of the quirks of our pricing system, you haven't felt a 32% increase in the price of fuel, in part because half of the price that you're paying is actually tax. So the price of fuel is probably 50 shillings of the 100 and something that you end up paying per litre. And therefore, if it moves down or up 10%, you don't really experience it. It's being muted by the tax, but it's been fantastic for the government of Kenya because they've been raking in the cash. So just to finish off this first section before we turn to Nzetse and we hone in on the big four, the president's legacy, we look at can the balance sheet support the big four, we talk a little bit about the Kenyan East African economy, the visit of President Museveni, the SGR, all these sorts of things, Ethiopia, they've been renegotiating the loan on their railway. But overall, the markets have had a tremendous first quarter, whether it's in Nairobi, whether it's in New York, whether it's the price, you're a commodity trader. If you were, you had a bit of a brain, you would have made some good money this first quarter. The question is, will it continue? And we know the markets can spin on a dime and everything can change overnight. The signals, if the market is getting stressed, is really to look at the price of the yen, gold, but gold hasn't been, normally people will go for gold, it's considered a safe haven, but that hasn't played out so far this year. In fact, the best performing currency has been sterling. And this also speaks to another point. We've been looking at Brexit now for over 2 years. The market has had 2 years to price in the worst case scenario. And I think what the market is telling us in the performance of sterling is it's all priced in, the kitchen sink, absolutely everything. Therefore, bad news is not affecting it. And if there's any good news, that thing could go up quite a bit because it's very, very undervalued as people look to downsize UK risks. Thank you so much for stopping by today for the Smart Investor. We'll come back for our second half momentarily. We've got Nzetse Were, and we really appreciate your feedback. We're on Twitter, we're on Facebook, we're on Instagram. Let's get a conversation going. Tell us what you'd like to hear about. I was wandering around outside Nairobi Hospital. Lady stopped me, the fruit salad. She said, "Alican, stop, stop, stop." I said, "Okay, what's up?" She said, what's the rand going to do?" I looked at her, I thought, wow. And and then I looked at what fruit she had, and she had oranges, and I noticed they were from South Africa, and I said, it's your oranges that you need to buy. I'm bearish the rand, I think it's going low. It got a bit of a reprieve today because people were worried Moody's was going to downgrade them to junk. They didn't, and that's why I got a bit of a relief rally. Let's see if it lasts. Thank you for stopping by. We look forward to speaking with Nzetse, and we look forward to your feedback in the second half. Thank you very much. Thank you for stopping by Metropol TV, the first 24-hour business channel here in East Africa. Welcome back, everybody. Welcome back to the Smart Investor. We're on Metropol TV, 24-hour business channel, the first one, in fact. It's rather fun to be here. And today I've got the very accomplished development economist, Nzetse Were. We follow each other on Twitter. We engage regularly on many things. Nzetse, I've got so much to ask you, but let me just start with the subject for Kenyans. Big Four agenda. What's going on there? Do we have the balance sheet to support the Big Four? How do you expect that to move forward now?
Well, I think in terms of the balance sheet and the fiscal space, the answer is no. And I think that's why government has been sort of calling this rallying call to private sector to sort of step up to the plate and sort of almost co-finance and co-develop the projects that they have in mind. But I think the biggest constraint to the Big Four has been the planning process. Because if you look at the actual sectors of the Big Four, which is manufacturing, housing, healthcare, and agriculture, those are devolved functions. But what didn't happen in the planning process was national government coordinating with county governments. When the county governments were going through the development of the county integrated development plans, there was no conversation between national and county from some sort of synergy and coordination to ensure that all these national government sort of goals and targets were actually being fed into the CIDPs. So what we have is a fundamental disconnect between what national government envisions for the Big Four and then the county government implementation of their own plans. Because you have to remember, county governments and the governors are held to the CIDPs, not to any sort of national government mission. So I think some of the lethargy we've seen and sort of the slowness has been this lack of coordination between national and county, but also just national itself trying to coordinate itself a bit more efficiently, which has been very slow.
So that disconnect, I mean, are you expecting it to narrow? Do you think there's enough understanding that this is a problem within the government and within the county governments, or do you feel it's going to get wider?
Well, I think it's just been an ongoing problem between national and county anyways. I think whether you look at, natural resource management or any of these other sort of sensitive sectors, you'll find that county and national tend to lock heads. What I'm not seeing is a concerted effort to create a remediation and a negotiation tool between national and government and county government bodies. So what you have is different opinions and there's a standoff. But what I don't see that sort of a structure that should be in place is a reconciliation method to get national and county to be on the same page.
So what you're saying is they're not really talking to each other at this point. There isn't a mechanism for them to be talking.
There may be a mechanism, but it's not being used. So what's happening is that the progressive governors, governors that are a bit more forward-looking, governors that are take a bit more initiative, can get out forward.
They can outperform.
And they can outperform. But if you're looking at sort of the institutional bureaucratic structure, that sort of renegotiation and sort of reconciliation methods just are not happening.
Because the theory was with devolution was that you would see your county much closer to you. You'd know who to point the finger at. You'd know that you didn't feel Serikali was in a sky up somewhere up there and you're never going to hear from them. Has that happened at the county level? Do people feel more empowered? Has there been real trickle down, or has it all gone in salaries? Because every time you open the paper, it seems there's been no investment in anything other than salaries.
I think it's yes and no. I think one of the fundamental problems we're having with tracking county expenditures that it's just not happening properly. If you look at the Public Finance Management Acts, most counties are just flouting those laws, and most counties are not complying to what they should be complying to constitutionally, and there are no consequences. So as a result, when you're trying to look at a macroeconomic bird's eye view of what is the economic effect of county spending, what is the economic effect of devolution, that can't really happen because the metrics aren't there, the tracking isn't happening, so we can't extrapolate anything. On the other hand, there is a devolution of corruption that's happened, quite frankly. And in the work that I've done, when I sort of go to counties, particularly remote counties, that were very far, like Turkana is a good one, but I wouldn't necessarily say this is what's happening in Turkana, but I'm saying counties that were very removed from Nairobi, which never got any money. There is an appreciation that there is a budget now for that region, and that even if it's eaten, some of it will remain in that geographical location. So I've been to places where like, oh, look, this politician has built this building, this one is being put up by this politician, and it's not done in a spirit of anger. It's sort of like, well, thank heavens, some of the money is staying in our local economy. So I think it's been very difficult, in my view, to measure the impact of devolution economically, partly because county governments are not complying. So you can't just do that tracing and sort of make any sort of conclusive,
But I agree with what you were saying is, some of these places I remember being very small. There has been some trickle-down effect. How it's happened, I don't know, but you do sense there's more activity outside the center of Nairobi.
Definitely. I mean, you definitely do get a sense that, you know, the small businesses and the private sector ecosystem has been awakened, but now that's shifting again because county and national are not paying their suppliers.
How much is that amount?
I mean, I think there was a report by the Kenya National Chamber of Commerce.
That's what I was going to.
Yeah.
I was quite taken aback when because that's an off-balance sheet item, right?
Yeah,
it's not
yeah.
even showing.
And you know, this is one of the broader problems that we're having around the fiscal space that the Kenyan government is in, is that the debt owed by county government, either to suppliers or to financial institutions, is not being reflected in the national. You know, when national says this is our debt to GDP ratio, when national says this is how much we owe, that's their figure, right? And because we don't know how much each of these counties owe, whether it's to suppliers and service providers or to financial institutions, most of whom took that money unconstitutionally,
Yes.
because that should be underwritten by the Treasury. And Treasury has sort of been trying to tell them, listen, you guys just cannot go around borrowing money without letting us know and getting our okay. But that's been happening anyway. So what we're seeing really, and I think the broader sort of risk that devolution is having, is a gross understatement of our GDP debt exposure, a massive
That's very worrying.
understatement. Yeah. So I think eventually, if we can get a bit more sternness around the financials and ensuring county governments comply to the PFMA and give the Kenyan people the figures that they ought to be giving, then we can begin to get a sense of where we are and then start taking remedial action. But right now, you can sort of do what you want and there are no consequences really.
That's incredible.
Yeah.
Rather worrying.
It is worrying. It is worrying. And I don't know what we're going to do. I think part of it is just the fact that the institutions are very young in devolution. When institutions are young, it tends to be personality driven. So you'll find some counties where they're very sort of responsible, like, you know, what the Auditor General just released sort of towards Makueni, and those counties where you're seeing more progressive governors being very responsible. So what we're seeing is that the culture and the financial structures and the institutional strengths at county level are really personality driven, mainly by the governors and sort of the relationships they have with the MCA. So I think it's just sort of also a matter of time when we'll start seeing that institutional stability coming in maybe in a few decades, hopefully.
I was speaking to somebody, they did a similar experiment in Indonesia, and they said it took them 10 years before this thing really started to turn around. And Zete, we started off about debt to GDP. We were talking about the fiscal space on the government's balance sheet. When you look at the numbers this year, repayments, interest, I mean, there's just nothing left, it seems. What's your perspective on where we're sitting right now? Are we okay? Are you worried at the speed of accumulation of debt? For me, debt is not a bad thing as long as you're making a good investment with it, right?
And that's
So,
the
I mean,
issue.
if you're outperforming your borrowing costs, borrow as much as you want.
Yeah.
But how do you read it right now? Should we be cool? Is nothing to see here, or how should we be thinking?
Well, I was ringing the alarm about 3 to 5 years
You
ago. Because I was very concerned at the pattern of fiscal performance and the pattern of fiscal policy formulation, because it was really defined by 3 things. It was defined by subpar revenue generation.
Yeah.
Every year.
We always have a
Every
bigger.
year.
I mean, it's a mind.
Targets are revised down. We're told,
Why is
we're
that?
not going to hit our targets. I think the revenue generation question is a very complex one. I think it's rooted in a lack of incentives to pay and the fact that it's easy to evade tax. Let's just be honest.
Yes.
It's easy to evade tax in Kenya. And if you do not have a government that demonstrates value for your taxes, there'll be no incentives for people to be like, oh, yes, I will pay. So
Can I get to that point you just made? Do you think people have reached a point that that's what they're thinking? Because that's like a revolutionary moment. If people think, look, I'm paying a lot of tax, I'm not getting anything for it, it doesn't take it doesn't take much then to move people onto the streets and things. Are we at that point?
No, we're not, because a lot of Kenyans are in the informal economy. So that's the other big problem, which is that a lot of Kenyans do not have regular incomes or regular business activity that is regularly taxed. Now, that wouldn't be a problem if government was demonstrating value for money. You would understand this sort of 15% presumptive tax that they want to push onto the informal economy, in my view, is morally abhorrent.
It is
Because if you look at the conditions that most Kenyans earn a living and run their businesses, I do not understand why government is trying to extract money from those people, particularly a presumptive tax that probably they won't see again. There may be one structure built and then that's it. So I think until government gets to its accountability issues, until government begins to demonstrate to Kenyan people that you're getting value for money, people will continue to evade. People will continue to participate in illicit financial flows. Transfer pricing will continue, and there'll be absolutely no incentive. And then the second thing is, if government doesn't do the work to structurally change the economy, increase levels of profitability and productivity for informal businesses, and begin the process of formalization, they can do whatever they want in terms of lazy, intellectually lazy sort of tax policies. But I think the revenue generation problem will continue, particularly in light of the growing expenditure that they just sort of seem to have been going on since they started. So that's been the problem with fiscal policy, is that subpar revenue generation increases in expenditure and therefore more and more borrowing. I have not seen any signals of fiscal consolidation because there's no political will behind, particularly to limit our expenditure and to get our expenditure more healthy in terms of our recurrent development divide.
So you think our recurrent expenditure is still not under control then?
It won't be because there's no political will.
There isn't, right?
No, and I think that's...
But really, theoretically, if you were looking at it dispassionately, you'd probably cut it in half.
Yeah, I mean, honestly, you would just come in and just say austerity period.
Yes.
But because you've had the handshake and all of these sort of political compromises that have this whole political architecture that go behind it, making the hard and fast, economically sensible decisions are very difficult in the current political climate.
Out of those big four, which one do you think is doable first? What would you be if you were advising the president, say, look, we haven't got enough space, we can't do it all, let's just focus on this. What would your first choice be?
I may have a bias, but I honestly think manufacturing and affordable housing, because they're linked. I mean, if you look at manufacturing, it's really the anchor of all the big four. Because if you look at manufacturing, if it comes to agriculture, the only way we're really going to transform agriculture is if we get value addition and agro-processing up and running, getting people to add value to the agricultural produce so that they make more money, so it links to manufacturing. If you look at universal healthcare, again, pharmaceuticals, the cost of medicine, the cost of drugs. Again, we need to domicile that. And then, of course, if you look at housing, construction materials, again, manufacturing. So for me, manufacturing is the anchor of the big four agenda. And I think manufacturing is less politically emotive than some of the others. When you talk about health or agriculture, housing, it becomes a very politically emotive subject. Manufacturing can be quite a technocratic discussion around job creation and value addition. So in my view, but I mean, really the fundamental problem that we're having is that in order to effect the structural change that the big four envisions, you need more than 5 years. So you cannot use 5-year periods, try and get policy changes in 5 years and expect a change in 5 years. You need a 20-year planning period to create the graduated changes in policy, to create and stimulate the structural economic changes to get to those goals. So again, we're sort of seeing the cost of democracy on sort of planning when it comes to government processes.
So may I throw it now wider on that cue that you've given me? We were just, can we look at the East African community? Whenever I look at GDP, East Africa is actually a bright spot in comparison.
Always.
Look, South Africa, Nigeria, and people seem to get excited. But let's try and unpick some of the things. We had President Museveni in Mombasa. He got a ride on the railway. If you look at trade flows, pretty key for us now.
Absolutely, East Africa is crucial.
Transit state, we're the ones supplying. How do you read our relationship with Uganda? Some people are telling me, Ali Khan, he hasn't put his stuff on the train. That's why we're suffering. Is that true?
Well, I mean, honestly, two things are going on in terms of Kenya and our neighbors. One is a political problem, where we are really the only democracy in the region. I mean, if you look at who we're surrounded by Uganda autocracy, Tanzania increasingly autocratic, Ethiopia's been an autocracy, Rwanda autocracy, Burundi civil war, South Sudan civil war, Somalia civil war.
Doesn't sound very good.
So when you look at
It's a dangerous neighborhood.
Well, I mean, we are literally the only democracy. So when you're an economy that's democratic and all your neighbors are not, that creates a certain flavor of economic diplomacy and foreign diplomacy in terms of how you actually deal with that problem while still sort of remaining democratic. And I think government has tried to do what it can in sort of trying to remain democratic in a neighborhood that's really just not. I think the other reality when it comes to the economics is that everybody is tired of Kenya being the big boy and sort of bullying and using its weight. In the work that I've done in manufacturing in particular, despite all the talking that we get in these EAC meetings, the non-tariff barriers and the lack of economic cooperation on the ground means that things like regional value chains just don't happen. When you're talking about Kenya trying to increase its exports to the region as part of the EAC, what you'll find is a lot of non-tariff barriers where a lot of countries will say, no, we have our own industrialization policy. We don't want you to sell your goods to us. Come and set up your own factory here. So there is a sense of competition going on in the EAC that stifles a broader regional vision around what we could do as a bloc. For example, I think the sugar value chain should be regionalized. I don't think Kenya should necessarily be planting or growing
we shouldn't
sugar.
be growing it. Our
so.
yields are pathetic.
Thank you.
Yes.
I really don't think why we should.
And when I looked at the numbers, how much money we pumped into that, for what reason?
For how long?
Yeah.
And we know that's political. That's got nothing to do with
That's
the numbers.
the political economy, which is also very expensive.
Which is the
we just keep
democratic-
bailing everything out, right? I mean, if you look at it, there doesn't seem to be a strategy.
There's no economic logic behind that level of bailing of Mumia sugar. Like, that just does not make sense.
It doesn't.
And I think rather than having the conversation around transitioning those farmers into more lucrative products,
Yes.
we've been doing the lazy thing of political bailouts that keep a value chain that just doesn't make sense. We should be importing sugar from our neighbors who are better doing at it. The same thing with cotton. I think Kenya should not necessarily be focusing on growing cotton. We should be value adding. We should be the fabric developers. We should be the manufacturers of fabric in the region.
But actually, that part of the economy has done quite well under AGOA, hasn't
Well,
it?
no.
The
The
textile.
part of the textile value chain that has done well is the value addition part. We
Yes.
import the fabric.
Yes.
What I'm talking about is the manufacture of fabric.
Of that fabric.
From cotton to fabric.
Yes.
We're very weak at that in the textile value chain. I mean, Africa generally. But we are a bright spot in Africa in that AGOA has really demonstrated that we do have value addition ability once we have the fabric in our hands. But when you look at sort of the fabrics that are being made typically in the region, which is why Rivertex is being revived, you don't have the variety, the quality, we don't have the variety of different types of fabrics, whether it's polyester or whatever, we just tend to have cotton. So again, that's a regional conversation where some of the other regions should be specializing in creating the fibers that are required for fabric manufacture, and then we manufacture the fabric and add value. But you see, the political will isn't there.
It isn't there to
but the rest of Africa seems to think we've got it right. So
I want to ask you, because I've got a few minutes left, one last question. I got terribly excited when Prime Minister Abiy came into power. I loved what he said. I mean, he seemed to be sending messages of love to Isaiah Afewerki, who's probably no one's ever sent him a love message except Abiy. He talked the talk, which I hadn't heard since '94 Nelson Mandela. So I got all excited. Tell me what you're reading. I mean, Ethiopia, what's your read on the situation now? Is this place in a good place? This GDP number, is it sustainable? Are they opening up the market? What do you feel?
I think there are two concerns I have with Ethiopia. First is the federalism, the ethnic federalism that's growing, and sort of the tribal tensions that are becoming very serious. And it's going to inform the elections when they eventually come, God knows when. So I think what we're seeing now in Ethiopia is something we've never seen before, which is a country dividing along ethnic lines. And God knows Kenya knows that story and how horrible that can be and just what it can cost you economically. I think that's one of my big concerns. The other,
And you don't think he's got control over that?
those issues are so long-standing and so deep. You know, I went to school in Ethiopia. I went to school when Mengistu was in power.
Wow.
So I saw, you see these injustices that have been carried on, sort of just what we have in Kenya, where people feel they've been aggrieved since, since they can remember, since living memory exists. So the sort of grit and spirit of cooperation that will be required to get that ethnic federalism solved, God bless Ethiopia in that, because when you open that can of worms, getting that back can be very difficult, and a certain level of clamping down. But the other bigger problem I have is they're creating a dual economy in Ethiopia.
In what sense?
They're creating a sort of, they're creating a SEZ, export-oriented economy, and then everybody else.
Yes.
So you see the special economic zones that are getting all the investors in.
Yes, this is where all these big manufacturers are coming in.
Creating lots of jobs. But what I'm not seeing is
spilling over into
the domestic economy. I'm not seeing technology transfer. I'm not seeing knowledge transfer. I'm not seeing a link between these big players working with the domestic local businesses to create more of a multiplier effect that creates sustainable growth. So I think a lot of their growth has really been driven from FDI into very specific regions, and that's causing its own problems because of the land that they get, and then people are kicked out, and
Yes,
this creates
well,
political problems. And so I think the dual economy that I'm seeing in Ethiopia is a concern.
Let me ask you for your final comments. If I gave you $5,000 and said you must go into one of these countries, where would you go with that $5,000?
In Africa?
Yeah. What's the one that excites you? What would you get on a plane and think, you know what, let me go and try?
I'd actually say Ghana.
You would, huh?
Yeah.
The worst performing currency this year, but
I think...
did you see all that? I mean, I was quite unfortunate. I couldn't understand it, but they got 3 billion of Eurobonds.
Well, the Eurobond question, I think that's a conversation for another day.
We're going to have that conversation.
But I do think Ghana is the most sober democracy we have on the continent.
They've handed over power on marginal wins several times, right? Yeah.
I think when you're talking about a democracy that is actually stable, sort of without these massive upheavals we have in countries like Kenya,
Yes.
or just going the autocratic way and just pretending to have elections and everybody knows it's a farce.
Yes.
I think I can see an emergence of some sort of technocratic democracy that can take root there, certainly faster than it would happen here.
My final question is, do you feel that, when you look at the average African is now 18 years old, let's say,
my gosh,
right?
I know.
Born post-colonialism. I mean, there's no experience of it. Born free generation. What do they want from their leadership, and when will they get what they really want? I mean, you look at Uganda, you can see these friction points. We look at what's happening in Khartoum. Is the change arriving, or is it still a long way away?
They want to be given a chance, and they want to stop being told that they have to entrepreneur themselves out of poverty. I think a lot of people the young people resent being told that they all have to be business people, because why? Their parents and their grandparents graduated and had jobs waiting for them. But now it's their job to entrepreneur themselves out of poverty in a context of no support. And the reality is that not everybody is an entrepreneur. So what I think a lot of the young people would want is more responsible use of public finances, a fundamental restructure of the economy, so that when they do their part and go to school and finish and get their degrees and have their skills, that there is a labor market that can absorb them.
And Zetsewere, thank you very much for really an engaging conversation today, and thanks for coming through.
You're welcome. Thank you.
Thank you, everybody. That's our show for today, The Smart Investor, because we want our portfolios to be smart. We just learned that Ghana is the destination and Zetsi fancies. Thanks again for stopping by. We really appreciate your support. Metropol TV, 24-hour business channel. See you tomorrow, same time.